Well, thank you so much for joining us here on a Monday morning. Hope you're having a good one. I'm Marlon Bowling, your tour guide to the ag commodities. And now that we're into a new trading week, I want to welcome aboard Brian Hoops, the president of Midwest Market Solutions, and we'll talk about the setup for today's trade. And Brian, always a treat to get to visit with you. Lots of news over the weekend. I hardly know where to start here. Tammy was talking earlier in the broadcast about the Ukrainian attack on a Russian oil tanker. Some say that sometimes it was used to cart around some military equipment. I don't know, but anyway, that was part of their reasoning behind that. But it was at I think, a Crimean port, correct, where that actually took place. And then Ukraine attacked a couple of bridges, key bridges, going into Crimea, which is the big supply line from Russia to that part of the country there. So that really caused a lot of consternation. There were heavy attacks from Russia into Ukraine over the weekend. Things really notching upward in the escalations here over the weekend. So that seemed to lift the wheat market. Soybean trade, though, seemed to really be pressured by abundant rainfall across the Midwest. Would you interpret it that way?
Yeah, good morning, Marlon. It was a great weekend as far as rainfall across some of the parts of Iowa and some of the dry areas of the Corn Belt. Several inches of rain. A lot of clients are reporting this morning. So it's going to take them a long ways through the month of August into September. And the forecast, the 6 to 10 day, is very similar to what we've seen over the weekend, with above normal rainfall chances, below normal temperatures, or at least normal, which really will help fill out the ears for corn. Soybean pods will get nice fills. And, we have a supply and demand report coming up on Friday where the speculation is USDA lowers corn and soybean yield. If they do, I think the trade is going to be looking at these weather forecasts and talking about the possibility of raising them again in the September supply and demand report. So, yeah, soybeans really took it on the chin over the weekend. Corn seems to be caught in that middle ground between wheat, which was trying to rally, and the soybeans, which were plunging lower. You had a lot of weekend unrest, like you mentioned, and so we saw a little short covering in the wheat market as a result. Funds on Friday anyway, short maybe 55,000 contracts or so of wheat, as we saw it in the Commitment Traders report, but they're long over 90,000 contracts of soybeans. They're long several thousand corn contracts. So the soybeans are the one that's most vulnerable to some long liquidation based off the weather. Wheat is vulnerable to some short covering based off of what's happening overseas. Egypt tendered for wheat over the weekend, so there's an abundance of news to talk about this morning. And, the overall fundamental picture just kind of remains bleak as we're increasing supplies of corn and soybeans and really not unloading any supplies of our wheat.
Well, at this point, let's take a look at where we wrapped up in the Globex trade overnight, shall we? We'll go to our quotes provided by Bar Chart. And on the corn market overnight, just a little bit of weakness. September down 1.25 pennies at 4.83. December down 2 at 4.95 1/4. It was off of its earlier high of the overnight trade by 5 to 6 cents. Soybeans are where we really had the pressure. My goodness, we had September soybeans down 39 cents at 13.48 after a high of 13.80 3/4. Woo. November down 30 cents at 13.03 1/4. It got as low as 12.99. Yeah, we had a 12 handle on it for a little bit, and we're just barely above $13 right now on that November contract. That was before we got this announcement we'll get to in a second. Now on the wheat. In Chicago, September was 12.5 higher at 645.5. December was up 12 in the overnight trade. In Kansas City, you had hard red winter wheat with September up 8 1/4 at 760 3/4. And we had December 7.5 higher at 776 3/4. How about Minneapolis wheat on the spring wheat variety? Well, we were 2 higher in September at 824 1/4 and December up 2.5 at 840 1/4. On the cotton market, we finished up, well, actually, I think it may still be trading. December is up 78 points at 85.07. Now we get to the overnight developments. And just as I was coming to the studio, got an alert from USDA that we had some overnight sales. And, well, we had sold corn to Mexico. It was 251,460 tons. And we had sold more soybeans to China. 2 more boatloads, 132,000 tons to China. Both, of course, are for the new crop marketing year. So, Brian, will that help to stem the selling over on the corn and soybean trade overnight?
I wish it would, Marlon. I don't think it's going to. And I do think we're going to continue to see export sales of this magnitude going into the rest of the month of August, into September, before we get into our harvest, just because of that uncertainty of what those yields are actually going to be. And of course, these sales at some point can be canceled once again. But as we've seen with very aggressive sales of the last 2 weeks, of soybeans, it really isn't going to help us from a standpoint of making soybeans rally this time of year. It's great to have them on our books, maybe tighten up the balance sheet or give that appearance anyway. But as far as our overall trading, it's not something that the trade is going to react to in a positive fashion. It may provide a little bit of support to the market, but I don't think we try and rally off this news whatsoever.
And of course, a lot of the trade will be getting positioned ahead of the supply and demand report later on this week. We'll pause right here. We'll come back and we'll talk a little livestock right after this. All right, we're back talking with Brian Hoops of Midwest Market Solutions. Well, Brian, what do you think about livestock as we get into this week? I know it was one of those weeks again where there wasn't much happening out in the country until late in the week. Did it finally break loose, or was it like the week before where nothing really happened?
But we did have some break loose on Friday. It was at about $1 higher money in the Southern Plains, but it was very limited volume once again. The heat seems to be dissipating this week, and I think you will see much better cash movement. Hopefully we see some early in the week, not just late in the week. The packers have cut their kills in an effort to kind of reflect the lack of cattle that they were buying. So we were way under last year's kills. I think we were close to 648,000 head a year ago and only 613 this last week. So we'll probably see an increase in our kill schedule coming up, but certainly we need to see some better cash movement and cattle movement. There's some reports coming out of Iowa from a couple weeks ago. We were speculating about how many cattle had died, and there's several hundred heads that apparently died in the month a couple weeks ago in Iowa. So we're still waiting to hear out of Nebraska, where all those death losses were rumored, and parts of the Southern Plains that may start to affect the markets this week. But right now, kind of a steady to firmer type call for the cash markets, waiting the show list numbers coming out around midday.
Boy, with the already tight beef supplies, I mean, we can ill afford that, right?
Yeah, if you talk, several hundred head, that's probably something the market can absorb. If you talk several thousands of head, 10,000 or more, that would be kind of a disaster to the cattle industry, and hopefully that's not the case.
Man, that would almost be like a severe winter storm. Losses on that.
Yeah.
All right, let's take a look at where we wrapped up last week then, and use that as a point of reference for where we're going to start today. Let's go to live cattle. And on the big board, we have the August contract, 240 higher Friday at 180.90. So it was up toward the upper end of the trading range on Friday. Strong move there, but the most active is going to be your October, and it was up 160 at 182.90. All the contracts were way over $1 higher. On the feeders Friday, we had the August contract up 157. The active September was up $1.80. And your leaders would have been October and January, which were at least $2 higher Friday. And then on the lean hogs, we wrapped up everything higher across the board, led by October, which was up $1.02 at 83.07. So we'll see if they can venture back to that plus side again today and follow through or not. So anyway, we'll get answers here in about 6 minutes. Brian, thanks for all the help this morning. Appreciate that very much. You have a good trading week out there. We'll talk with you again soon. Brian Hoops of Midwest Market Solutions, and he is in Springfield, Missouri. So